Welcome to Anafram Market Perspectives.
Friday market recap. Trump's tariffs rattle markets, tech slides, and jobs in focus. Welcome back to our Friday market recap. If you're new here, we cover the week's biggest market moves, policy updates, and what to expect heading into Monday. So don't forget to follow for timely insights. This week was intense. The markets took a hard hit, driven by President Trump's official rollout of new tariffs. Economic data showed a mix of slowing growth and sticky inflation. Investors are now facing a very different risk landscape than just a week ago. Let's break it all down. S&P 500 weekly recap. Red across the board. The S&P 500 sold off sharply midweek, following Trump's trade announcement. Defensive names like Procter & Gamble, Coca-Cola, Pepsi, and Costco held up fairly well, each posting modest gains. But overall, it was a brutal week for most sectors. Some of the biggest losses came from the usual heavyweights. Apple dropped over 9%, Amazon and Meta were close behind, and Nvidia tumbled nearly 8%. Semiconductor names like AMD, Broadcom, and Texas Instruments also saw double-digit losses. Nike sank more than 14%, reflecting its vulnerability to Asia-based supply chains. Tesla slid as well, as investors questioned whether the company will continue receiving political protection. The market mood flipped quickly from cautious optimism to outright concern. Trump's tariffs go live. April 2nd was officially declared Liberation Day by President Trump, as he rolled out sweeping new tariffs. These include a 10% baseline tariff on all imports not meeting USMCA or CUSMA rules of origin, a 25% tariff on foreign-made automobiles now in effect. Beginning May 3rd, there will be a similar 25% tariff on imported auto parts. Beyond that, customized reciprocal tariffs were announced. 34% on China, 20% on the EU, 24% on Japan, and nearly 50% on Cambodia. Canada and Mexico were spared the new measures, but older tariffs on steel and aluminum still apply. The market didn't take it well. On Thursday, the S&P 500 fell nearly 5%. The Nasdaq dropped 6%, and the Dow slid 4%. Apple, Amazon, Nvidia, and Meta were all among the worst performers. Financials like JP Morgan and Bank of America also saw steep losses. Precious metals surged. Gold hit a new record above $3,160 per ounce. It was a clear sign that traders were seeking safe havens. Economic signals, mixed but mostly slowing tariffs, may have taken the spotlight, but the week's economic data added fuel to investor worries. China's manufacturing PMI showed modest improvement, and the Chicago PMI surprised slightly to the upside. ADP payrolls came in stronger than expected, and jobless claims ticked lower. But there were plenty of red flags, too. The ISM Manufacturing Index fell below 50, signaling contraction. The Services Index missed expectations. The employment component dropped sharply, and the Atlanta Fed revised its GDP now estimate to negative 2.8% for the first quarter, reinforcing fears of a slowdown. Add to that the drop in job openings from the JOLTS report, and the overall tone was clear. Growth is cooling, and the labor market is starting to feel it. Volatility spikes, the VIX breaks out. The VIX, Wall Street's fear gauge, jumped to 26.20 this week, its highest level since last summer. That tells us investors are bracing for more volatility ahead. Bonus section, how did our picks perform? Let's revisit Monday's bonus picks. VanEck Semiconductor ETF closed the week down more than 5%. It fell below its Ichimoku support, and the MACD turned negative. Our call to stay cautious was right on the mark. Tesla finished the week just above where it started, holding in the cloud range, but volatility spiked. This remains a trade for active, short-term players only. Restoration Hardware, RRH, was the big miss. It dropped over 35% after a weak earnings report and tariff pressure. Both MACD and cloud signals confirmed the breakdown. Final takeaways. This was one of the toughest weeks for the market in recent months. The tariffs are no longer just talk, they're law. Tech and consumer stocks are under pressure. Economic growth is slowing, and volatility is rising fast. Looking ahead, watch global retaliation. China and the EU are preparing countermeasures. If you're holding growth names, it might be time to reassess your exposure. If you're leaning into defensives or cash, you're not alone. We'll be back Monday with a full market preview. Until then, stay informed, stay strategic.
Thanks for watching. If you found this valuable, hit subscribe and share this with others. See you next time on Anafram Market Perspectives. See you next time on Anafram Market Perspectives. Oh, you gotta love